Welcome, everybody.
Everybody.
Good
Got a
evening.
big crew, so you're flying in. We're gonna give it a second. It went from 2 people to 117 in like 1 second.
Quick. That was quick. Yeah, hey, look it's Christmas Eve, Peggy. Christmas Eve. It's October 1st tomorrow. So, big day in our financial aid world that we live in.
Oh my gosh. Are you kidding me? That's a terrible analogy.
Wow, I don't know. It's
You're not feeling well, so I'll give you a break on that one.
yes. Um,
Yes, this will be recorded. That's one of the things we were going to share. This will be recorded and we will share it with you. So thank you, Nicole, for asking that. So now I don't have to announce it. That's all.
we'll announce it again. We'll announce it a few times, I'm sure. Um, yeah, do the let's see, tell us what graduating class you're a student and where you are in the world, right? I know most of us here in the States, but we're very well represented geographically. So just tell us, and not just the US, where you at? There you go, Chicago and Chicagoland area. So we got some other Jersey girls here, Peggy. Some
Mhm.
Boston folks. We got good old fashioned Red Sox versus Yankees playoff baseball tonight. So game one of the playoffs, which that's fun. So thank you if you're what multitasking here. So um, okay, so we'll do quick introductions, quick housekeeping stuff because we got a lot to cover, right? Obviously, the FAFSA, the CSS profile available tomorrow. Wink, wink. They're actually both available right now, but kind of the official public facing launch available tomorrow. So we want to just talk about best practices and then how this kind of first of all, why should I do these things even if I'm not eligible for financial aid? And what's kind of the get here? How does this fit into the broader context of getting discounts for college and paying for college? That's what we're going to focus on. Really best practices, easy. We're going to help you avoid mistakes that are easy to make. And then as we get into October, we'll get more granular, kind of line by line type, not exactly that granular, but close into the forms themselves. Don't even worry about submitting the forms over these next couple of days, right? Don't worry about these myths like first come, first serve is with the financial aid, how the money is given out, right? We're going to talk about how and why deadlines are so important, but don't worry about getting your forms in this week, even. Okay. Okay. So by way of quick introduction, my name is Matt Carpenter. I'm a founder of College Aid Pro. I was trying to do the math earlier today with Peggy on our podcast. Shout out to our podcast. Where I've been doing this for 21 years, about 21 years. So I have shepherded families, done a lot of tours around the sun, done this tens of thousands of times. I share that to say that you're in great company between Peggy and myself, who's been doing this for over a decade, right? So 30 plus years combined, being on the front lines here. Um, Ask your questions. We want them. Right? We challenge you. Put them in the Q&A, right? We're going to tell you, don't put your questions in the chat. Put them in the Q&A. But whichever one of us is not talking, we're going to be living in there. We're going to answer as many questions as we can. We are not we're not going to be able to answer every question because some are going to be personal. We're divorced. How should I answer this? How should I value my business? How should I value my property? We're going to say, talk to us. Okay. Before we leave tonight, we're going to give you action items. Okay. This is what you do now. We didn't do our job if you guys just kind of listen to us and then just kind of get back to your lives, so to speak. So I've been really gravitating towards this kind of philosophy that I heard. I annoy my team with how much I say it, but I think it works. I think it's resonated with Peggy, but action absorbs anxiety. So if you're a little bit nervous about this whole college thing and it's overwhelming, number one, you should be. It's a normal thing to be a little bit concerned about this, right? It's your kids and your money. But know what makes us feel a little bit better? Take some action. Action absorbs that anxiety. So we'll leave you with some action items. You're in great hands. This is the fairy godmother of financial aid herself. There is nobody that you want in your living room, in your kitchen right now, more than Peggy. But Peggy, why don't you introduce
Okay.
yourself quickly, and then we'll get cooking.
Yeah, yeah. I like the title. Makes me feel good. But yeah, and you know what? I've been doing this for a really long time, but I've done it with my kids. I have twins, so that's probably my best credential. I have all the knowledge, the intellectual stuff, but I've been there emotionally. I've been through this with my kids, and It doesn't have to be as hard as it is. It really doesn't. So that's really what I dedicated my life to. There's somebody with triplets. Love it. And there's planning opportunities when you have more than one kid. You got to understand all these pieces. And when you're filling out financial aid forms, there's planning opportunities. It doesn't end until you're basically waving goodbye at the dorm. And then, we just did a webinar for people that are in college and what they can be doing with their kids that are already in college to maximize discounts and navigate the system. So it really doesn't end until they're done. So that's me. So let's kick this off. And people have been asking in spades already. Yes, this is going to be recorded and we will send it to you tomorrow. So don't worry about that. Someone said I have to leave early. Don't worry. You're good to go. Put your questions in the Q&A. We'll remind you verbally and in the chat. That's where we're going to be looking. We have a lot. We have a lot of people on here tonight, so we'll do our best to get to as many questions as we can. As Matt said, we typically can't get to all of them, so give us a little grace there. We're doing our best here to answer your question. So let me share my screen. Now let's get started. I mean, this is who we are. If you've been around the block with us, been on the webinars, this is our mission and empowering you to shop smarter for college. You're shopping. You've got a list and you're going to get award letters and all of this. And this is a step in this process that we're trying to guide you so you don't, what I like to call drift, because drifting is stressful and it's very expensive. So you want to make sure that you know what's going on. So there we are. Matt made this slide not long ago. Come from a big Irish family. I was the black sheep and did not go to Notre Dame like the rest of my siblings, but it's near and dear to my heart. You want to talk through this since this is your slide? I want to take it away from you.
Well, I'm just setting the table here, right? It's game time, you know what I mean? It's officially game time tomorrow. Our job is to explain kind of here's how this works, specifically how's it going to work for your family, not just at a meta level. And again, make sure that you take some action here, right? We have our action items before you jump tonight. So stick around with us until the end. But that's
Yeah,
it.
yeah. Okay. Okay. Everybody, this is part of the action. Everybody should have gotten an email today. Go ahead. Matt will put a link in the chat. Go ahead. A lot of you already have this, and that's great. So you're good to go and you're set. I just shot our how-to videos today, Matt. I got
Oh, there
them
you go.
done and gave them to our master Eileen, who's going to do her magic. So we'll show you that in a bit. But lot of stuff in here. So set up your free MyCap account. You can upgrade for $4.99 a month if you choose to. So get that done. Matt put a link in the chat. So as Matt said, we're going to go meta level and then we're going to dig into your family and we're going to talk about tips and tricks for both of the forms that are live right now, but on paper, October 1 is the big official date, even with the beta. FAFSA just came out and said, oh, forget about October 1. We're going to go live now a few days ago. So financial aid, and you might know this, but it bears repeating. High level, all these colleges are discounting. That's why you got to set up your MyCap account, because we are going to show you, hey, costs 100,000, but this is what we're projecting you're going to pay. And they do that in 3 different ways. They discount with need-based grants if you have financial need, and we're going to talk about that. Merit-based scholarships, which Bill Gates's kids can get. It doesn't matter if you have need or not. It's based on your child, grades, test scores, that kind of thing. And then, of course, there's self-help. So loans can cut the costs. We're not going to talk about those tonight, but that's part of strategy. And your child can get a job. It could be work study, which is need-based, or they can just get a job, honestly, at the bagel shop or whatever. But that's discounting that you decide to do. But these buckets are discounting by the federal government, your state, but mostly from the college. And that's the key thing, is to understand that. And it's not easy to understand. The schools do it differently. They treated my son Brennan differently than my daughter Shannon at the same school, right? Because they were different kids with different resumes and different profiles. So it's not one size fits all. That's honestly why we exist. So need-based aid, simple formula. Equation: cost of attendance minus your SAI, student aid index / EFC, That's what gets calculated from these forms. It's vital that you submit it. That's how they get your needs. So school costs 100. And when I say cost of attendance, I mean tuition fees, room and board, books, travel, personal expenses. It's all of it. And of course, this has been going up for literally decades, as we know. No control over it, but you do have some control over sometimes what your SAI is and what schools you pick that are going to come to the table for you regardless of your SAI in certain circumstances. So that's really what you want to understand here.
Okay, so in terms of Peggy just laid it out there, right? Completing the financial aid applications is what helps these colleges come up with this student aid index, this actual dollar amount that gets assigned to your family. And there's two different broad formulas, okay, two different broad SAIs, and that's the federal methodology, one's the institutional methodology. Usually the cheat code there is to figure out what's what is that colleges that only require the FAFSA use the federal methodology. Colleges that require the CSS profile in addition to the FAFSA it usually means that they use the institutional methodology. And of course, there's huge variations and a spectrum within them, right? We got to think of these colleges as their own businesses. And of course, we have to know, well, for the colleges we're applying to, how do they run their business? Now, obviously, that's all on the platform. We have that baked into the algorithm. But I want to share some general rules before we drill down to particular colleges. Number one, and any money that you have, as you can see by what's on the screen here, colleges put way more emphasis on any savings in the student's name than they do in the parent's name. Okay, so and again, at a minimum, when they look at student assets, they're looking at least 20%. We've seen it go up 50%. We've seen cases where colleges say 100% of the money in the student's name should come to us, right? They're benefiting from this education. If they had money in their name, that should directly impact the SAI. So what's the takeaway here, right? What's actionable? Well, even if we have, let's say you got 10,000 bucks in a savings account, right? Your kid's an industrious kid, or they're very good savers, right? So for my chosen people out there, first of all, Shana Tova, Happy New Year. But if your kid saved up all their bar mitzvah money, and they got 10,000 bucks in there, before you submit the FAFSA and the CSS profile, I would want to add my name onto that savings account, right, as a parent. Okay, and then when I submit, the FAFSA and the CSS profile next week, guess what? I can include that as my name as the parents. It's going to lower the SAI for all of these colleges, as opposed to having it in the student's name. So very easy thing to do. It's perfectly kosher, 100% within the rules of the game. We're not being assets are reported in real time. So the second you hit the submit on the FAFSA or CSS profile, that's where they want to know kind of where and how your assets are structured. And the big thing is in the middle here, front and center, we are only reporting non-retirement assets on the FAFSA. You're going to hear us say that more than once tonight because we'd be doing you a disservice if we did not beat you over the head with it. Remember, when they ask us for the net worth of our investments on the FAFSA, we are not putting our IRA, we are not putting our Roth, we are not putting our pension, we are not putting our 401k. Okay, Peggy, I think we can go to the next one here. So a lot of people hear this and they go, "Oh no, they're putting all this emphasis on money in the student's name, but most of our savings are in a 529 account. I'm screwed. I'm not going to get any financial aid." Common knowledge would make you think that that's a student asset, right? It's for college, their name and their socials on the statement. No, you as parents own the 529s. The student is the beneficiary. So when you're reporting any balances in the 529, you are including that as a parent asset, not a student asset. So mission critical, you don't make that mistake. And it's not just a clerical error. It'll kill you in terms of your SAI and therefore your need-based financial aid eligibility. A couple other notes here. This is a new recent rule. If you have more than one kid, you're only reporting the balance of the student that's going off the college, right? Peggy's a parent of twins. So if she had $50,000 saved for each of them, on the FAFSA, she would only report $50,000 for the relevant student completing that FAFSA. There's also an opportunity to be strategic here, right? This is we could have some choices to make here where maybe if we do some reshuffling of our 529, maybe now it doesn't have to be on the FAFSA. If a grandparent owns the 529, grandparent assets don't go on the FAFSA. They own that asset. Again, the student is just the beneficiary. So again, these are some places where we can make decisions, be strategic, and help ourselves, maximize discounts. We already got a few different variations of this question, right? It's a little bit unfair that we have these four colleges on this slide because they're representing dozens of others. Okay, these are just again a representation of dozens of popular colleges around the country that if you own your home, they consider that to be fair game, right? I pick on my buddies in Boston College here. No, it's world class institution, but if your home's worth 600,000 and you owe 200,000 on it, Boston College says that's a $400,000 checking account. So that's a major problem, especially where I live in the Boston area and you folks in the Bay Area and Southern California and New York and North Jersey, right? These really expensive areas uh, of the country, right? Where, and maybe this is our biggest or kind of our only asset, non-retirement asset. So the easiest way now, again, when we're speaking to a room full of people, we cannot give firm blanket recommendations, but a strategy that can be relevant and apply for a lot of homeowners is when you go to report the value of your home on the CSS profile. And let me be clear, you are not putting this on the FAFSA. I'm going to say that again. We are not putting anything to do with the value of our primary residence on the FAFSA. I am only talking about the CSS profile. Again, that's an easy mistake to make. You're going to reduce the value of what you think you could sell your home, kind of the lowest defensible value of your home by 20%. Okay. And we can do that via something that's called the IRS quick sale rule. So, for example, if I own my home outright and it was worth $1 million and I didn't have any debt on it and I sold it for $1 million tomorrow, I'm not going to put $1 million in my pocket, right? I'm going to pay fees, I'm going to pay taxes. On average, I'm going to net 80% of that. In other words, the actual value is 20% lower than the lowest defensible market value. So that's how you want to think about pricing it. But there's part art, part science, right? You don't want it to jump off the page. You're not doing anything wrong, but a financial aid counselor is just going to cross reference if it jumps off the page. They'll cross reference it on Zillow or something like this, and they'll use the highest value that they think they can find and they can justify. And remember, any way that we can show more debt on the home, that's a good thing. So if we have an equity line of credit that we're drawing from, we want to make sure that we include that as debt in addition to the primary mortgage. Okay, Peggy. Business owners, another very, very easy place to make a mistake. Let me make this simple on the FAFSA. Let me just simplify this and please perk up, pay attention. If you are a business owner, I don't care if you're a one man or one woman show here and you're a sole proprietor or you have a bigger company that's a C Corp, S Corp, however it's structured, doesn't matter. You're put, when they ask you for your business assets and the value of your business on the FAFSA, you're putting zero. Full stop. You're putting zero. Okay. Remember that because they're not very clear for how they ask it. They just kind of ask, put the net worth of your business and the assets of your business here. If you read the fine print, they tell you that only put a number here if you have more than 100 employees. Okay. And I'm probably, if you have more than 100 employees, you shouldn't be listening. Okay, you should be enjoying your successful business and life, et cetera, et cetera. Now, and again, I'm kidding a little bit, but most small business owners, it's less than 100 employees. We're putting a nice goose egg on the FAFSA. For the CSS profile, we do not have that option. We're going to have to answer some questions about our business, including the value, including things like gross receipts and gross expenses, and some more specifics of the business. There's not an opportunity to get cute with those questions. These colleges are going to be looking at our tax returns, including the business tax returns, the corporate tax returns, and all the schedules. So there's again nothing to think about when we're asking questions about gross receipts and gross expenses. But when they ask the value, do not overvalue. And for most, I'm telling you, the vast majority of people that I talk to, they do not have a business value above zero, right? They are the business value, right? The assets leave in the elevator each day, right? And most business owners, if they decide to, sail off in the sunset or God forbid get hit by a bus tomorrow, there's no real value of that business, right? So be comfortable putting zero or at least the lowest value you could possibly think of that you think you could justify, and get ready to have a conversation with these colleges. Don't don't shoot yourself in the foot by using too high of a valuation. Okay, so this is an important one. I want to spend a couple of minutes here.
Yeah, everybody perk up because I'm getting this question over and over again. So if you're divorced or separated, listen to Matt now so that I don't have to type the same answer over and over again.
It just hit answer live, answer live, answer live. So look at
Exactly.
already a confusing, stressful, overwhelming process. I don't care who you are, what family dynamic you have. When we enter in another ingredient, it can make it a little bit harder, right? So a lot of divorced and separated families fit into that category. Especially when it's not amicable and communication is not great, or maybe this is a recent development, right, for your family. So a couple different things. I'm going to start with FAFSA only schools because these are the quote unquote easiest. Okay. If a college only requires the FAFSA, there is only one household that completes the FAFSA. Okay. That is, um, if you're a divorced and separated, split household, two household family. Okay. Only one household is completing the FAFSA. Which household is it? I'll tell you who it's not. It's not who the student lives with the most. It's not who claims the student as an exemption on tax returns. The only thing that matters that determines who completes the FAFSA is who provides the most financial support to the student. Okay, to the student. Let me emphasize that because a lot of people we talk to say, well, they pay me child support, so that they should complete the FAFSA. Well, not necessarily because they pay you that child support, not that student. Maybe the student lives with you and you pay the mortgage for that student. You put the roof over the head. You're buying the groceries. You're paying the $20 here, $20 here for, gas money. You're the one paying for, club sports. And if this is where we want to be strategic, guys. If you're a split household family where maybe it's pretty close in terms of like who provide, and guess what? Most conversations I have, they're like, I don't know. It's probably pretty even. This one does this one does this. And geez, we'd really have perfect. Okay. See to it that the household that has the lowest income, the lowest amount of assets, the one that's going to give you the lowest SAI, right? See to it that that parent provides the most financial support to the student so they complete the FAFSA. So you have the lowest SAI for the student as a family. So you're eligible for the most need-based financial aid eligibility. Okay. But be clear, if that parent is remarried, okay, that step parent goes on the FAFSA and for all intents and purposes is treated like a biological parent. Their income, their assets will get factored in, the same way that the biological parents will. So that's again another variable to consider here. Colleges that require the CSS profile, most of them, in addition to the custodial household, right? Which, and again, the way that they define custodial, the one that provides the most financial support to the student, that is the house. Both households will complete the CSS profile. Okay, so even the ex spouse will complete the CSS profile as well. And there's exceptions within here, right? Now, again, this is all. You don't have to know. All of this is in the platform in terms of which colleges require what from both households, one household, whatever. But that is how it works for most CSS profile schools. Vanderbilt, U Chicago, Santa Clara, those are three examples of CSS profile schools or institutional methodology schools that are exceptions to the rule in the sense that they're only looking at one household if you're divorced or separated. Okay, Peggy.
All right, so let me take over here. So if you are, I've gotten some questions around SAI and stuff. So if you have a super high SAI, you're in our software, you're looking at it, it's 150,000. Matt and I have seen these hundreds and hundreds of times. All is not lost. That's when you're going to turn to the merit aid. And I just answered a question in the Q&A about merit aid and how you apply for it. The good thing is at most schools, if you apply by a certain date, you are automatically considered for their merit. It could be competitive, but you're automatically considered. There are some schools that actually have merit awards that are really good, like full tuition or full tuition and room and board, and they might require an interview or something else, a separate app, an essay. But most schools, they automatically consider you, and you can know this ahead of time. If you haven't set up your MyCap account, we have a merit scholarship database in there under each school. So you can see, it actually even helps to see if you take tests again and get test scores a little higher, you might get a little bit more money. So all is not lost. There's many families that take advantage of this. And when I say merit aid, we're talking about 5 figures a year, and it's almost always guaranteed for all 4 years. That's the beauty of it. When you're planning this out over 4 years, like you all should, how you're going to pay for this, you can count on that 20,000 every year, and there's $30,000 a year of merit. So it's a very nice perk. Certain schools do not give merit, and you can see on the slide here, Notre Dame gives a little. There's a Hesburgh scholarship. If you're a betting person, though, you're not counting on merit at the schools that's their, like Matt used the term business plan. They just don't offer merit. They offer amazing need-based aid, but they don't offer merit. So you need to know that when you're building the list, not to take them off, but to realize the reality and where you're going to have to look to find a discount if you're not going to get need-based and there's no merit on that campus. A big thing you want to keep in mind, and this is kind of planting a seed if you have younger kids, and it's, it's September, so it's not too late to apply to other schools. Competing schools is a big deal, and we do this because we're looking down the road. Okay, we're looking down the road to when your child gets in and you get what's called financial aid award packages, and they're saying this is what we cost, and here's some loans, and here's some merit, and here's some need-based aid. You can appeal on merit aid, and it's huge. Like, even another 2,000 in merit, that's 8,000 in your pocket because it's good for 4 years. Public schools, if you're going to have a generalization, you're not going to be able to do a lot of appealing at public schools, but I put this on the slide because I've done this. Arizona and Arizona State, you can play them off each other. They're direct competitors, and they both give decent merit to out-of-state kids, which is not the norm, but they do. So it can happen there. Much more common with private schools if you're doing merit. And I have the two schools up on in the right corner. Now I have the Ivies on here. I just got through telling you that they don't have merit aid, right? And they don't. But, and I've personally done this, not for a couple years now, but you can play them off each other for need-based aid. They calculate their need differently. And my experience with them, and Matt can chime in if he wants, they will play ball all day long to match their competitors. No questions asked. They know how each of their competing schools do things, and sometimes Columbia is going to give a better offer than Yale, and Yale more often than not will step up to the plate. So it's need-based. Competing schools make a difference, but with merit it's huge, and people just don't think about it. They might like one school that competes with another, and like, I don't like that other school. We'll just apply anyways, because down the road, if you get merit at both, we can play ball with it. So that's a really strategizing, forward thinking thought. Okay. I've had this question again because it's super common, and we're ready to submit forms. Should I submit them if my income, somebody put their income was 300 or 325? I'm going to say it depends. FAFSA, yes, but it depends with the CSS, and most likely yes. And the reason why I have these schools, again, we're not trying to throw them under the bus. We're trying to educate you. So like NYU, if you don't submit those forms, they're not going to consider you for merit scholarships. You're not submitting it for merit, but that's their policy. Santa Clara up in the top left, and I've personally dealt with them. It's been a few years. If you don't submit it freshman year, you're telling them we don't want your money. So if life changes, you get a younger child in school, you lose a job, you're stuck, right? So you don't want to roll the dice. And then we have OU on here, University of Oklahoma, one of our pros on our team. is head of scholarships, and he said, if we don't see the FAFSA on file because they don't require the CSS, like we're not super open to appeals. Like if they haven't availed themselves of the loans just for the student at $5,500, how hard up can they actually be? So it is important to submit these forms for almost every family. The FAFSA, yes. CSS, I've had one or two in all the years where I'm like, all right, if you really don't want to submit this, don't, but you got to get answers to certain questions to satisfy me from somebody who knows what they're doing at the school. And most of the time it's just better to submit them. So I pretty much covered all that on this slide. I forgot this was in here. So
Well, the last one I'll say here is that, and this is one that a strategy that I really like for families that aren't eligible for need-based aid. Do the FAFSA. You're entitled. You can be a billionaire. You're entitled to, and shame on you if you're a billionaire on this presentation. But
I say pat you on the back. You're a billionaire because you're on this presentation. That's what I would say.
you're right, Peggy. Yeah, that's right. That's right. Yeah, this might be a big billionaire crowd. I don't know. But you will still be entitled to that federal direct student loan up to $27,000 over the course of 4 years of college in the student's name and the student's name only. They don't need a cosigner. They don't need established credit. Take out that loan in their name, pay it off the next day, do that each year. They will graduate college with perfect credit. So that reason alone is one that, even if you have a ton of resources, use that strategy, right? And the rich get richer, as they say, Peggy, huh? Um,
Yep.
okay, let's see. Next slide here. So we got, I think, a lot of questions. If okay, on the should I go ED like this little babies right here, right? So this is we get this question all the time. We've got it a bunch tonight. What is our thought on ED? Are we going to get less money? This is how we coach it, and we each have our different talk track, but we're very aligned as a team. We all see it the same way, and this is kind of the way that I articulate it. We got two big boxes that we need to check with a lot of confidence if we're going to apply ED. Number one, this just has to be your kid's dream school. There's like barely any ambivalence, the little to no ambivalence. They're just like, I have to go here. I see myself here. I got the hoodie already. I stare at the ceiling every night and just picture myself on this campus. This is the place for me. Okay. Not a lot of kids fit into that category. We hear about them, right? Because they're vocal about it, but not a lot of kids fit that category. Then we have to know as a family pretty much exactly how much this school is going to cost us, not just for year one, but for all 4 years versus our budget. And we have to be able to stare at that outcome and say, you know what? This works. Like we can make this happen. This is not a reckless, financially irresponsible decision. Um, and guess what, guys? Nobody on this call has an excuse not to know exactly how much the colleges are going to cost you versus your budget, right? As I'll show you in a second here. So you have to look at that and say, look, that's great. If you can check both of those boxes with a lot of confidence, you have our blessing, right? God bless. Not that you need it, okay? But if we're hesitant, if we're wavering on either one, it probably just means we should go early action, right? We shouldn't go early decision because that's a binding agreement. Our kids have to sign the agreement. We have to sign the agreement. The school counselors, right, at our guidance office at high schools have to sign this agreement too, saying we're going to your school, pulling all other applications if we don't get accepted. So it's something that you want to take seriously. And I'll show you, Peggy. I'll share my screen for a second here. So you guys, right now, right, we can take the anticipation out of, well, what's my SAI going to be when I submit the FAFSA? This is what it's going to be. If you filled out 100% of your profile, you already know what your SAI is. Now, the other, I think, unique part of the platform here is that when you submit the CSS profile, unlike the FAFSA, you don't get to see what the SAI is. You don't know what that kind of methodology, how the end result, I guess, the dollar amount that they're assigning to your family. You'll know it here, right? You see your institutional SAI front and center here. Now, let's just put in the chat if you guys are thinking about going ED or your kid's favorite school. Just put it in the chat quick because we'll look at a college or two, and this will tell us. We'll look at their business model. Okay, there we go. MIT. Now, if you want to go to MIT, you just talk to me. That my wife works there. She can get anybody in. Just kidding. Obviously, she does work there. She can't get anybody in. Look at pretty stinking expensive, right? $90,000. This kid's going to go there for $33,000, right? Now, why? If I want to take a deep dive at any college, I can see, well, here's their high level admission statistics. Man alive, it's pretty stinking hard to get into to MIT, right? Darn near impossible. But if we do, they meet 100% in need, right? So we can see all 4 years, right, what our net cost is going to be. I don't care about the sticker price. I don't care if you're 70,000, 100,000. I care what I'm going to pay. What's my family's net cost going to be? Now, if our SAI is really high, there's no scholarships at MIT, right? So let's look at another example of a school that, can be pretty good with scholarships. Okay, I saw Baylor here. So Baylor. Okay, so this is one where, look at, even though they're not quite as expensive as MIT, it's going to be a lot more for us to attend because they're now why? Again, we can take the deep dive. They're not as generous with need-based financial aid as we can see here, right? They don't meet 100% of need, but they do give merit. And for every college in the country, we have every scholarship that they offer, the qualifications for each, right? And when we talk about this affordability, when we talk about making this ED decision, again, for any college you put in there, we're going to tell you, we're going to kind of give you the thumbs up. Obviously, the dream is no loans. That's not a reality for most families. A great outcome is if the student borrows $27,000 or less. Why 27,000? That's the federal direct student loan. Our next threshold that is still a measure of success is, do we expect the student to borrow less than we expect them to make their first year after graduating from college? So if we look at this Baylor example, their sticker price about 360,000 over 4 years. After grants and scholarships, we're paying 239. This family's budget is 164,000 over 4 years, meaning the student's gonna have to borrow about $75,000. You might hear that and be like, that's not a good ROI. That's too much money. But guess what? They're going to be a computer science major, average computer science major that graduates from Baylor, average starting salary 103,000. The math works, right? The data supports the ROI for this. Now, if they were going to go be a social worker or be an elementary school teacher, then we would be pumping the brakes and saying we want to be a little cautious, right? So as you're adding schools to your list, this is kind of a heat map for you. You have your safety target reach schools at admissions wise. We want you looking at it financial wise too, and we just don't want too many schools in the top left here. Let's make sure we have some balance from an affordability standpoint. So again, make sure that you're leveraging the platform. No excuse not to know exactly how much colleges are going to cost you before you submit. No excuse to not know exactly what your SAI is going to be at the FAFSA schools and the institutional schools. Things like, we got all these questions about how do I know who requires home equity, who doesn't. That's all baked into the platform. How do I know who requires information from both households? That's all baked into the platform. So again, you guys have it at your disposal. Please take advantage.
All right. So let's dig in on the financial aid forms before we wrap up here. So when you start to do these forms, and I know some of you have mentioned you're in them already, this is the stuff you're going to need: your tax returns, your W-2s, all your non-retirement information for your accounts, real estate, child support if applicable, alimony, all that stuff. So the FAFSA, the free application for federal student aid, it is live. Few people commented, I already did mine. Yeah, as long as you did the 26, 27, you're good. It's been in beta since August. So some people could get in, then a lot more could get in September, and then they just opened it up to the masses early. As Matt said, CSS on paper is tomorrow, but it's been, I think it was September 16th, because I watched it like a hawk in September. So they're both live. You have to get an FSA ID. Your child does, the student, and who's ever submitting the FAFSA needs to get that to get in. The good news is, if you do it tonight or tomorrow morning, it's real time. It'll be approved. You don't have to wait like you used to. If you Google create FSA ID, make sure you're on a studentaid.gov site. Go ahead and take care of that. But let's talk through who needs to get it. The student definitely does. And if you have twins, that triplet dad I saw, all three of them need one. You're going to do 3 forms. They're 3 different kids. There's not one form for the family. They are called the parent, the guardians, whoever else is contributing to that FAFSA, meaning their data is called a contributor. It has nothing to do with contributing money. The government made up this name. Enough said. Okay. Not the best name because people think they have to contribute money. You're just contributing to the FAFSA, and and you have to, or else it's not going to be a valid FAFSA and you can't get money. So who's the contributor? Who has to get this FSA ID? It depends on your family. So if you're happily married, or you're married, happily or not, and you file married filing jointly on your taxes, one parent needs to get that FSA ID, and that'll work. If you are divorced, Matt went through and explained, only that custodial parent is submitting the FAFSA. The other biological parent is not. So that's the only parent that's going to get the FSA ID along with your child. If you file married filing separately, then you both need to get it. That's the one thing when you're married. And the reason is when you go into the FAFSA, you're going to be consenting to move your IRS data into your portion of the FAFSA that will be a part of your child's. So if you file married filing separately, there's 2 tax returns. So each of you have to be identified and each of you have to consent. If you're married and you file married filing jointly, there's only 1 return. So hopefully that makes sense of who needs to get that. You got to go ahead and get it because you can't start without it. That's the first thing. So let's go over the tips. We've covered a lot of this. I'll repeat it again because it's super important, and I've answered a bunch of questions about retirement accounts in the Q&A. No retirement account should be put on the FAFSA. The CSS asks for the balance of all your retirement accounts. It shouldn't be included. I'm not even going to go on a soapbox about that right now, but it's not part of the calculation on the FAFSA. There's just one question about the net worth of your investments. Everybody asks, inherited IRAs. It says IRA in it. That's retirement. None of that should be included. Your home that you live in, if you aren't renting, don't include the equity in that home. Don't include the market value minus your mortgage. Does not belong on the FAFSA. Other real estate, yes, but not your primary home. With your 529s, only put the balance. Matt used me as an example. Only put the child you're doing the FAFSA for, and put it under parent assets if you're the owner. If grandma owns it, it's not even on the FAFSA. If you see a question about work study, click yes. I honestly don't think it's on there this year. But click yes, you're not obligated, but that'll leave it in the mix. Make sure you understand that SAI I talked about at the beginning, that is not what you're going to pay. That's kind of the starting point for the college to decide how they're going to package you, which means how they're going to give you money in different forms, and discount their sticker price, basically. Don't overvalue your business. Don't overvalue any real estate, but on the FAFSA, it's only your secondary real estate, not your primary home. And don't miss deadlines. Don't miss them for admission. Don't miss them for financial aid. It's very punitive. Gives the colleges an opportunity to give you less money that maybe you should be getting. Second form, someone asked in the Q&A, what is this that you're talking about? This is a second financial aid form. Only about 250 colleges require it. We have like over 3,000 colleges, but they tend to be the super popular ones. So you're not submitting it without the FAFSA. It's do the FAFSA every year, do the CSS freshman year, maybe every year, it depends on the college. Key differences, Matt hit this, home equity, all your real estate is on the table. Some schools won't look at your primary home, like Stanford. They'll still get the form and see it, but they don't include it. Divorced and separated families, both biological parents are sending the CSS. One with the student is the custodial. The non-custodial profile gets sent by the other biological parent. If there's a reason that other parent should not be communicated with the child, it's not safe, whatever it happens to be, they're off the grid, there is a non-custodial waiver, and it's well worth your time to submit it to the colleges. If you have a legitimate reason, more often than not, they will waive that requirement. Without waiving it, they won't give you any of their money. And that is the big pot you want to tap into. Like I said at the beginning, business owners, you're going to be submitting everything, you're going to be uploading tax returns. They're going to go over your tax return with a fine tooth comb. They're going to throw out expenses. That's why you need to understand this process to be able to appeal. We are really good at that. So you should leverage us. This is a much longer form than the FAFSA, and you're going to use your child's credentials to get in. So tips and tricks here, few different ones, few that are the same. There are required questions on the CSS profile, and there are non-required questions. You don't have to answer the not required questions. I'm not going to tell you don't answer any of them. There's strategies there that are family specific, but I'm just going to put out there, don't feel like you have to answer all of them. It's not going to give you an error message. The FAFSA, there's got to be something in every field, but not the CSS profile. So keep that in mind. You don't want to, I might have mentioned this before. I've done the videos. I don't remember, to be honest, but my 3 commandments here are: be honest, don't overshare, and don't overestimate. And so when it comes to your businesses and all of your real estate, the don't overvalue is huge. It's just, you don't want to overestimate anything to your detriment, right? You're not going to flat out lie, but you want to find the lowest defensible. And Matt mentioned the IRS quick sale value. That's a nugget we don't always mention on free webinars, to be honest. So you're lucky that he dropped that nugget there. 529s, they do not go under the student. We've talked about that. They go under the parents. You have to put the total on the CSS. They ask for all the students, and they have allowances to pull it out. You can appeal it if you have big 529s. That you have triplets and you have a massive amount of money in the other two, you need to let the college know. There's a question on the CSS that asks the student, how much are the parents or the parent going to contribute for the 26-27 school year? This question is not going to help you the answer, but it could hurt you. That's why it's vital to understand your SAIs and don't put a number that's higher than what that college thinks you can pay. Because the minute you put $1 more or $10,000 more, that's what they're going to say. Oh, great. Keough family's going to pay that. Awesome. We're going to up the ante. Forget about the SAI we calculated. They're telling us they can afford more. So there's strategy here. You got to be really careful. They ask about future. They ask about 25 and 26. It's not supposed to be part of the methodology. They're trying to get an overall view of your family. Again, don't overestimate what you're going to make in the future, your child either. And I think Matt mentioned this, but it bears repeating. At the end of the CSS, there's a section where you can click boxes and say, these things have happened to me, and you can explain. Our recommendation is don't fill that out. Keep it in your back pocket. Keep that card in your pocket so you can play it later. You're going to appeal and then share. Oh, by the way, I have 20,000 of extra expenses I didn't tell you about because my mother lives with us now. Whatever it is that is a strain on cash flow or a change, you're going to want to bring it out later. Don't put all your cards on the table and then you don't like what you get from the college. You reach out and they say, yeah, we're good. We read what you wrote and we took it into account. It's just giving you leverage. So really don't fill out that section. Plus it makes it easier. You just hit none and you keep moving on and you're almost at the end of the form at that point. And again, just like the FAFSA, for obvious reasons, do not miss deadlines. It's really important to look that up. I'm going to turn it back to Matt and we're going to end with my puppy dog, Ashling, because this is a stressful process. And when unless you're a dog hater, which if you are, that's okay. I still
And
love you
make
if you're
sure
a dog
sit
hater.
tight with us, guys. Sit tight with us. So look it, and the as cute as Ashlyn is, and Ashlyn can get you through anything. Another recipe that I'll steal from our good friend and colleague Bill Rabbit here. Look it, and again, make sure that you guys sit tight here. Uh, you can get through the FAFSA with a beer or two, maybe a glass of wine. The CSS profile is going to require breaking into the liquor cabinet, 30 pack, whatever's your pleasure. Like that is the form that makes you want to rip your hair out. And, so again, that's the formula. Now I'm talking just to our 21 plus folks here. So don't get any ideas if you're a a student on here, and obviously I say that kind of in jest. But I want to make sure that everybody is crystal clear on what we were done last week with being able to work with any of our full service wake me up when it's over families. We have added to our roster, and we have added, I think, in a very significant way. Current director of financial aid at MIT, formerly at Boston College, somebody that's very seasoned in this space. So we can take on 8 more full service again, wake me up when it's over clients. So I'm going to quickly talk through what that looks like because we're doing a promotion just for tonight for $500 off. If anybody decides to engage in this, if you're a DIYer and this type of service is not for you, stick around as well because we're going to have a recommendation for you. So this is, and by the way, if you want to book a time, we don't do this, but for just tonight, where we're just have 8 more families that we can work with here. If you know this is something you want to do, just Peg put the link in the chat here. Sign up right now, get started. We're going to hit the ground running tomorrow. You're going to hear from our team tomorrow to get you on board, and obviously we're going to have your FAFSA and CSS profile completed this week, among other things. But if you want to talk to somebody first tonight before committing, book a time right now. But here's kind of the quick deal. So we have 3 types of wake me up when it's over services: a financial aid package, an admissions package, and some people are like, give me both, right? And again, we can only take 8 more class 2026 families, $500 off if you buy tonight. So for our Wake Me Up When It's Over financial aid service, you're going to be working one-on-one with this individual from now until your kid moves into their dorm. Okay, unlimited hours. Jesus is going to grab the wheel through every step remaining in this process. So that means, like I mentioned, we're going to complete your FAFSA. We're going to complete your CSS profile. If you're applying to U Chicago or a Princeton that has their own forms, we're going to complete those. We worry about who needs what, where, when, how. Okay, you don't have to worry about deadlines or anything like that. That's up to us. The how is the really important part, right? Think of like having a great CPA. How you present your situation in these colleges is going to dictate the size of your discount, right? Um, how do we value your home? How do we value your other property? How do we value your business? You're divorced or separated. How do we figure out who should be completing the FAFSA and the CSS, right? We're going to tell you, do you have competing colleges? Do you have enough leverage on your list of schools? We're going to lead the charge, right? You think Josh DeMayo knows how to appeal for more money when he's been on the other side of the desk for 20 years? He does, I promise. So there's a method to the madness. When we go back to colleges to get more money, we have to know, are we going to admissions? Are we going to financial aid? Is it the student? Is it the parent? How do we leverage the college's business model in our favor? So we lead the charge on that. And then once we know where you're going, we're going to help you pay the bill. So on average, and this is data driven, right? This is data driven. We say families $123,000, right? That is our average ROI. Okay. Obviously, we're saving you a lot of time as well. But if you think this is something you want, do it right now. You just hit the enroll today, and I think the this will bring you to your kind of checkout here to add your coupon code. You just hit FAFSA 500. You hit apply. That will take the $500 off. You pay, and then once you do that, again, you'll get onboarded. You'll hear from our team. You'll get a note from our team tonight, but you will get onboarded tomorrow. If you just want admissions help, if you just want one of our admissions experts to grab the wheel for and with your student, make sure that they're crushing their essay, their Common App is dialed, right? They have they're putting their best, most professional foot forward. We have a package for that. This one does not come with a discount. We cannot offer a discount on this. A lot of families that we work with are like, I need both. I want to make sure I nail this as a parent. Okay, I know what's at stake here in terms of the costs, and I want to make sure that my kid maximizes their odds of getting accepted in their top students. I want help with both. Um, so if you want to do that, you can. And again, we have 8 packages. Uh, if you know this is something you want, do it right now. Okay. If you want to talk to somebody tonight before the coupon expires at midnight, you can book a time right here through the link. Okay. If you're a DIY family, you outsource everything, you paint your ceiling, you change your oil, all that stuff, you know who you are. Treat yourself, guys. When we get back to that theme, action absorbs anxiety. Upgrade to $4.99 a month, right? That way you have instructions through the forms on demand. You can see exactly how much these schools are going to cost you. You can search an unlimited number of schools, right? You can see which ones are going to give you the most in financial aid, scholarships, etc. If you're a DIYer, spend the $4.99. If you can't afford $4.99, write into support at collegeaidpro.com and just say I'm a free and reduced lunch family, or we're eligible for waivers, or I'm neither of those, but $5 is meaningful for us. Write into support. Our team will get you on there free of charge. Okay. No matter who you are, the takeaway is take some action tonight. Think, if you know you're a wake me up when it's over family, if you see the clear value here, take advantage of the $500 off right now. It's going to be the best gift you'll give yourself this year. Okay. Um, do that right now. If you think you are, but you want some kind of reassurance, book a time with one of our experts right now. Jason Sloan, Dr. J, Joe K, Kevin Murphy are on the phones right now. You can, book a consult with them right now. For the next, I don't know, hour and a half or something like that. So if you think
I
that,
put the link
okay,
directly to that meeting in the chat too, so you can click on that.
great. And then again, if you're like, you know what, I'm not either of those. I know I'm not a wake me up when it's over family. Then go ahead and upgrade to at least the premium version of the platform for $4.99. And uh, again, kind of, I just really like this theme of take some action. There's a lot at stake here. We've got great questions tonight, right? I think that we answered over 100, I believe, Peggy. 93.
93.
Not too bad. Not too bad, though. I'd say
So
pretty
you
good.
guys have a lot of great questions that we just can't get to all of these, and it's clear from your questions that you really use some guidance in whatever way is going to work for you, like how Matt just went through it.
Yeah.
So
Okay.
whatever's going to support
Yeah,
you.
and then the cost, guys. So let's see, it depends, but yeah, it's either 34.99, but again, you buy tonight's $500 off, so it'll be 29.99. There's not a discount on the admissions, so that's 34.99. If you want the combo and you buy tonight, it's 59.99. So that's for the admissions, one-on-one admissions help, and unlimited one-on-one financial aid help, right? So in these case, you're working with two experts, right? For the financial aid service, obviously just one, or if you do just the admission service, uh, just one. But yeah, these are the prices. And again, this link is in here so you can kind of go read through the services and the pricing. And then obviously, again, if you just want to join the club, our kind of premium DIY membership, that's $4.99. Okay. Yeah, and let me just see. I'm seeing if there's any more questions in terms of. Okay. Okay, so if it says there are no dates available, probably too many people are trying to get in there right now to talk to us. Yeah, no, and if you have twins, again, book some time with us. It's not, you don't pay double for twins except if you do admissions. The financial aid, I think it's, Peggy, do you remember? Is it $1,000? Is it $2,000 for the additional twin? I think it's $1,000
I
additional.
think yeah, I think it's 1,000 for an additional twin because there is some different child, but there's some obviously your expenses and stuff as the parents are the same and your income and all that. So there's a bit of redundancy. I'm pretty sure. Yeah, I'm pretty sure it's 1,000.
And if you, let me just see here because
Siblings are more, but yeah, I'm pretty sure.
I'm showing, guys. So look, if you're having trouble booking, give it a second and go back because oh, okay. It looks like the slots maybe did get used up for tonight and October. That went quick. Oh, you know what? That's a different link. So look, if you didn't get,
No, I just refreshed it. There's still times from yeah, from 5:45 to 6:45 Pacific. So if you're, that's
Yeah, you got to
Add
kind of.
add three to it. But they're going. Like it used to be at
But look,
5:15 and now there's none.
if
So
you want to talk to somebody tonight, write into support at collegeaidpro.com. I'll put it in the chat right now. Support at collegeaidpro.com because a couple of us are going to be manning that as well, and we will do our best to get you taken care of tonight, right? If you want to guarantee that you're in one of the eight, buy the package, right now. And if you have buyer's remorse tomorrow, we'll get you a full refund, right? If you want to do it that way to at least make sure you get it. Um, or make sure that you confirm with your ex-spouse or your current spouse, whatever. Um, but yeah, otherwise, right, to support at collegeaidpro.com. We'll have a couple folks on here for a little bit tonight, and then Peggy, we're not going anywhere, are we, pal? We're you and I will be out here in no time here.
yep, yep, we're not going anywhere. So all right, guys. Well, thanks for
Thank you so
hanging
much.
on here and let us support you in whatever. Don't drift is
That's right.
my phrase, and action absorbs anxiety. It really does. Do something. I know it tends to feel like a lot, but we're here to support you along the way.
Yeah, 100%. Thank you, Peggy, fairy godmother herself, live and in the
Well,
flesh.
you go and get to sleep since you're not feeling well, okay? I'll be your mom for a minute and not the fairy godmother.
I'm a strong guy. I'm a strong guy. I'm a big boy, Peggy. I'm a big boy.
Okay, yep.
Bye. Good night, everybody.
Bye, everybody.